Hey everyone, welcome back to Corporate Decoder. Today, FFE Inc. just filed an amendment to a material definitive agreement, and I'm seeing some interesting changes to their financing. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing suggests they are restructuring some of their investor deals, and it looks like they are pushing back some of the obligations. Alright, let's dive into what Faraday Future Intelligent Electric Inc. FFIE Inc. has reported. This is a current report, meaning something significant just happened that they need to tell the public about. The earliest event reported here is from the 20th of August 2026. This filing is all about changes to a deal they made back in March 2025. So, way back in March of last year, 2025, Faraday Future signed what is called a Securities Purchase Agreement, or SPA. This is basically a contract where they agreed to sell some things to certain investors. They were planning to sell senior unsecured convertible notes, which are like loans that can be turned into stock later, and also warrants which give investors the right to buy stock at a set price. This deal was supposed to happen in 4 parts or closings with a total price of $41 million. Part of that money was cash, and some was from converting a previous loan into this new deal. They had already completed 3 of these closings. The first one was in April 2025, the second in May, and the third in July. But that 4th closing, the last part of the original deal, was still up in the air. Now, on the 20th of August 2026, they signed an amendment agreement. This is a new contract that changes the old one. The big news is they are splitting that remaining 4th closing into 2 separate closings. They also changed the actual documents for the convertible notes that would be issued in these closings. This is a really important change. They are getting rid of the company's responsibility to issue and the investor's right to receive common warrants and incremental warrants in the upcoming closings. Warrants are basically options to buy stock, so they are removing these from the deal. This means investors will get fewer rights to buy stock in the future under this agreement. They are also changing some of the warrants that were already issued in the earlier closings. For those, they are removing the part where investors could get common warrants when they exercise those existing warrants. This further reduces the potential for future stock dilution from these specific investor agreements. The convertible notes themselves, the ones that can be turned into stock, have been changed too. They call them Amended and Restated Unsecured Notes, or AMP-R notes. For the most part, they are similar to the original notes. However, the price at which these notes can be converted into stock has been adjusted. Now, this conversion price will only change under specific conditions on the final closing date. If they get stockholder approval or when a registration statement becomes effective, each of these triggers adjusts the conversion price to 100% of the stock's closing bid price on the day before the event. This seems to be a way to better tie the conversion price to the market value of the stock at key moments. The filing also lists the exhibits, which are the actual documents for this amendment, and the new form of the note. This is Exhibit 4.1. The actual form of the amended and restated unsecured note. And Exhibit 10.1 is the form of the amendment agreement itself. And finally, the signature section signed by the Chief Financial Officer, Koti Meka, on the 21st of August 2026. This confirms the company officially submitted this report. Now, looking at this filing, what does it really mean for Faraday Future Intelligent Electric Inc., FFIE Inc.? The company has been struggling, and this filing shows them trying to manage their financial obligations and investor relationships. By eliminating warrants and splitting the final closing, they're likely trying to manage cash flow and possibly give themselves more time or flexibility. It is a sign that the original deal terms needed adjustment, perhaps because the company's financial situation or market conditions have changed. Remember back in August, there was news about analyst upgrades and insider commitments, with Litchfield Hills Research reiterating a buy rating. However, the stock price has been extremely volatile, with a 52. Week range from $3.15 to $375. The market cap is currently very low, just $12 million. This kind of financing amendment, especially removing warrants, can be seen as a way to prevent further dilution of shares if the stock price were to recover significantly. However, it also means investors are getting less in terms of potential future upside through those warrants. The key takeaway here is that Faraday Future is continuing to adjust its financial agreements, likely in an effort to stabilize its operations and meet its obligations. The elimination of certain warrants is a significant change that impacts the overall value proposition for these specific investors and reduces the potential for future share dilution for existing shareholders. The risk I am watching is whether these adjustments are enough to improve the company's financial footing or if they are just rearranging deck chairs on the Titanic. What I am actually looking for is a clearer path to profitability and sustained operations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check the description for our Discord.